Hello guys, welcome back to another stream. So today, obviously, we're focusing on the bit of the sell-off that we're seeing. We are having a sell-off across the crypto market, and that is just predominantly because everyone is a bit uncertain as to what's happening. We're also hitting some crucial levels on the technical side of things, which obviously we're going to go through in a second. AJ, how are you doing today? What's your kind of thought process about everything that's happening today and the process to which we kind of should approach it?
Yeah, I'm doing well, thank you. Hopefully my Wi-Fi is all right today. I think it is playing up a little bit. I'm gonna have to get a new Wi-Fi, I think. But yeah, I'm doing all right, thanks. The market, we've broken some major support levels, so we'll be talking through those today on the technical side of things. So we'll get onto that a little bit later.
Yep. Okay. Let's do so. Firstly, Gaurav, hello. Good to see you again. Always love to have you back. And then Shiba, nice to see you as well from Egypt. Anyway, so let's jump in. I'm just going to quickly cover off a couple of the fundamentals. So today we have a little bit, should we say, a little bit more fear. So yeah, lower the number, the more the fear, basically. And I think that is obviously because of this little treacle that we've got here. So tomorrow, 1 day, 5 hours, and 35 minutes, and I don't know how many seconds. But we have the Fed funds rate. So they're going to basically say they're going to increase the rate of borrowing by either 0.75%, which is 75% likely. I'm not sure if that was orchestrated. That means that the Fed funds rate will be between 2.25 and 2.5. Or we have a 25% almost chance of being raised by 1% up between that 2.5 and 2.75 bracket. So this is kind of where we're looking. Yet today we have seen a higher increase of probability towards that 1% line, but it's still a decrease from last week. So at the moment, everyone's pricing in a 75 basis point hike. So if we get that, there's not really going to be too much change in the price. If we get a 1% Fed rate hike, then I think we're going to see a bit of movement to the downside for Bitcoin, also across the risk on assets, such as the NASDAQ. But then I think we'll probably end up in maybe the day following having a bit of a recovery, because that's going to mean that people are a little bit more excited about the prospect of inflation going away sooner.
Yeah, I think we're already seeing sort of that price, priced in as well, aren't we?
I know we are. And the thing is, like I went through yesterday, guys, if you haven't seen it, look through yesterday. JP Morgan and Morgan Stanley have two very different approaches on this. But, I'm kind of more in the camp that maybe inflation I think it has peaked, but I don't think, now from 9.2, we're going to go straight down to 8 or 7. I think we're probably going to be in the high 8s or the low 9s. That's a personal opinion. Obviously, you never know. But the Fed rate hike tomorrow, this comes in at 10 p.m. Gulf Standard Time. So that's like 7 p.m. UK time and 2 p.m. Eastern time in the US. So this is a very, very big bit of news coming in. But then also, and again, 75 basis point hike, as you can see. Then on the day after, on Thursday, we have the GDP growth rate Q over Q, so quarter over quarter. And this is hopefully going to see some growth. One thing I do want to quickly say, though, guys, and I haven't actually got it up here, but if you follow us on Twitter, which you should, and if you don't, I think I might have to kill you, is that on here, I shared this. So the government, a recession? Oh, no, we're not in a recession. It's only when you have 2 consecutive quarters of negative growth. That's what's coming. Oh, well, in that case. So while some maintain that 2 consecutive quarters of falling real GDP constitute a recession, that is neither the official definition nor the way economists, I should say, evaluate the state of the business cycle. Yes, it is. That is literally it. It is, however, it is unlikely that the decline in GDP in the first quarter of this year, even if followed by another GDP decline in the second quarter, indicates a recession. That is what's known as a recession, is 2 quarters of negative GDP. So I just think that's just a bit sneaky, a bit underhanded, and to be honest, I don't really, it's just classic government, But anyway, we can kind of forget about those. What we should do? Should we move on to some technicals, just to kind of keep this
Yeah. Yeah, we
going?
can take a quick look at the technicals. I've got a bad voice today. I've got a bit of a cold at the moment, so I'll try and push through it. But
Kissing
looking
too many of the
at
wrong
my
people.
sorry.
You've been kissing too many of the wrong people.
You could say that. Yeah, so starting off with the 4-hour Bitcoin chart, what we can see here is that we have seen, a pretty substantial pullback since, our last video, which was yesterday. And,
Can I just
I told
quickly
you,
pause you there and just let
yeah,
everyone know that they could go back and watch our videos where we said, "Hey guys, I think there's actually going to be a
yeah,
pullback before the big news."
yeah,
I'm not one to
yeah,
blow my own
exactly.
horn, but I am currently blowing my own horn.
Yeah. We told you this in yesterday. I told you this in yesterday's video. I was expecting a pullback. If we did see the rejection from this resistance level here, because we did break down. We were above this level, and when we're above this level, it is a support level. Unfortunately, we did break below it, turning that level into a resistance level. We came and tested that as resistance. Unfortunately, got rejected. And I said, if we did see this rejection, the likelihood of it is that we are going to come down to this support level, which was, a pretty major support level. But unfortunately, we've broken below this support level as well. Now, we are coming into another support level. It's not as strong, but as of right now, it looks to be holding the price up. And that's this blue dotted line in the middle of the channel. Now, when we see these rising channels and falling channels, what we tend to see is a lot of support and resistance within the middle of these channels. And you can see this very, very clearly here. So when we broke above this blue dotted line, you can see that we came back and down and tested it as support. We had slight support here before breaking below it, but then, coming very close to testing it as resistance here. Used it as lots of resistance here before then breaking above again. Again, here we broke below it, using it as resistance before, coming back down to the bottom of the channel. But again, we've used it as support when we were above it. So it is, a level that we can look at as well as, support and resistance. And as of right now, we are sitting right on that blue dotted line. So if we can get a potential bounce off this level, I think that's going to be great. But the likelihood of it is that, we can also break this support. And if we did break this support, I would think that we would come down to potentially the bottom of this rising channel that we have been in. We did get this fake out here. It is a fake out because we have broken back below it. But yeah, as of right now, we are sat on some support, and that's sort of what's holding the price up. If we do take a look at the indicators, you can see that we are very oversold at this moment in time, meaning that maybe we are going to see a nice little pump in the shorter term. But ultimately, we are back into this channel here. So for me, I think, we are going to have a slight recovery before maybe coming down further. Why do I think that? Well, that's because of this chart here on the daily. This, I've mentioned, this is a very, very important level along here. We've used it as resistance before. Now we were above it. We try to use it as support right here. Unfortunately, we are sort of pricing in that 75 basis points hike, isn't it, Ben, that we're pricing in? Yeah, and that's what we're pricing in right now. And that's sort of why we're seeing the price come down. But initially, we have broken this support level here. And this, sort of confirms that fake out of this rising channel, which we did break to the upside out of. Previously, I have been talking about this as a bear flag. We had a bear flag back here, and that's, gave us this leg down all the way to $17,500. This is, or was another textbook bear flag. We did break to the upside, but now we've had this breakout, fake out. Now it implies to me that we are most likely going to come back down and test the support here. Now, it's not certain we are going to, but, the likelihood of it is we are most likely going to come down and test that support level. Looking at the indicators, the RSI, the stochastic RSI down here, and the stochastic are all very neutral at the moment. We are coming down and getting into that oversold vicinity, but as of right now, we are very neutral. So it does indicate that we can come back up, potentially testing this resistance level here, where we could break above it again, or we could get rejected, or which is sort of the scenario that I think is going to play out, is that we are going to continue coming down to this support level, and that's when we'll sort of see the indicators reset, in that oversold vicinity, before we then see any sort of major move towards the upside, maybe coming back up and testing this resistance. But
And
yeah,
also,
this is a major
can I
support level.
add something in there as well, AJ, where I think because if it is that we get a 75 basis point hike and we see that it's already currently being priced in, I do think during today's announcements, today's trading day, we are going to see a bit of sell off. And also I'm going to bring up something else, but I think we are going to see a bit of sell off across pretty much all markets, just as people are not entirely sure because of in anticipation of tomorrow. But I think we're gonna, if we go to 100 basis point hike, I think that will probably bring us straight down to that support zone, as AJ just mentioned, because also that is where the indicators want to take us. It's what, the patterns, is what the, all of the technical traders are going to be looking at that, but also 100 basis point, it's going to bring us down. But then I think also one thing to consider is we have also today. So after the close, so today's trading day, there's not really too many people who are going to be announcing their earnings. But so tomorrow we have, this is before the open on Wednesday. So let's say we close later on today in the US, their trading day. And then before they open on Wednesday, we have Spotify, we have Shopify, we have Alphabet, we have Microsoft, we have Visa, all announcing their earnings, which obviously is going to, having a massive effect on the Nasdaq itself. So these are things that I also, want to kind of put in there, that there is a lot of anticipation that these companies maybe won't perform because some of them do rely on advertising revenue. So, that's one thing to kind of keep in mind that really verifies what AJ was saying here in terms of, probably seeing a bit more movement to the downside so that we can validate those indicators that we have. I've just brought your screen up here, AJ. And then that's potentially where we're going to see a bit of movement to the upside. So I think both scenarios, probably are not great. We might see a relief pump at 75 basis point hike. But I'm going to say, the indicators, like you said, AJ, just wanted to kind of reaffirm that with another bit of, information that's kind of going on outside.
Yeah, so I'm sort of gonna put a sort of TP point here. I think this box here. I'll change the color of it because it is the same color as my resistance box. But there we go. I'm gonna put a TP level sort of around here because this is looking at the fundamental stuff and looking at the technical stuff. For me, I think the price is going to come down to between $20,000 and sort of $19,000 at the support level. Where we go from there, we'll have to wait until we sort of come down into this TP point. But because it is such strong support, I do think we are going to find support there, and then most likely see a little bounce. But then after that, we can't sort of look too far into the future. But we are sort of going to be in a very difficult position where, are we going to break to the downside of this bear flag? If we do break the support of this bear flag, then we're going to start talking about sort of that $12,000 target, which we did previously have when we were back here talking about the potential break to the downside. So that's something we have to be very careful about. But as of right now, looking at the indicators, looking at the fundamental side of things, and looking at sort of technical and the indicator patterns here, for me, it looks like a pretty good shorting opportunity and potentially coming down into this TP point here. So sort of that's what I'm going to be looking at. But we do have to be very cautious. What I'll be doing is I'll be waiting to see if we can come back up and test this resistance level here before taking any action. If we do get a rejection here, then I'll most likely put in a short position. But yeah, sort
If
of
you were
that's
to
what I'm
do
looking
that,
at.
AJ, if it was to come back up and you were to short that, where would your stop loss be? Would you look at that to be quite tight, or would you look at the previous high and stick it above there, or what
Yeah,
would you
so
be
if
thinking?
normally, my stop loss is around sort of between 5 or 10%. So what I would do is I would open up a short at this, if we got rejected from this resistance up here, with a 10% stop loss, roughly. And, that sort of works perfectly with that previous high, because that previous high, which you can see up here, is sort of is around that 10% level. So that's sort of what I will be putting for my stop loss. And then obviously with the TP, first TP down here, then if we were to break to when we hit that TP, I'd move that stop loss to the break even point, and then I'll be looking at potentially TP2 or TP3 if we did break to the downside out of this support level, and those would be sort of TP3 would potentially be at 12,000, TP2 could be at potentially 16,000 or $15,500, but we don't want to get too ahead of ourselves right now. Right now, what I'm looking at is potentially a rejection, a retest of this level here, a rejection for that confirmed, break back into this channel. Then I'll be looking to go short all the way down to the support down here at this sort of between $20,000 and $19,000 level.
And that's only if we actually have that retest and we have that movement to the
Yeah,
downside. So,
yeah,
which is a very good, I think, because one thing is, you got to have your plan of, I'm only going to take this trade if we see these
yeah,
certain conditions, and can I lay those out before, so, because
yeah,
even this, like, you could just say, hey, I'm just going to keep going short, but, it's more than
yeah,
likely now we've come back into this zone that we might have a little bit of a retest, maybe even to the upside,
yeah.
as opposed to just saying, oh, it's definitely going to continue going down, just
And
because it has before.
exactly, yeah. And the reason I
Quick
wouldn't get
question.
into a short as of right now is because the indicators are very neutral. They're sat sort of in the middle of
Yeah.
the ranges. So there is that possibility that we can have that retest, and that retest is what we're looking for. And then I'll be looking to short that rejection if we do get that rejection. So
Quick
that's sort of
question.
what I'm looking at. Yeah.
Pi cycle.
Pi cycle, yes, I was just
Pi
about to go on
cycle.
to that with the 200
Yeah. So
MA. So the Pi
I
cycle,
guess she has. I was just going to quickly clarify. I said that if we have a break to the downside, as in and I know when you say downside, so the Pi cycle, just to
yeah,
clarify, only indicates where once it crosses, that's the very bottom, but that was 17 and a
yeah,
half. So there's still a lot of,
yeah,
room to the downside before we cross 17 and a half.
yeah, yeah. So this Pi cycle bottom indicator, it could be wrong. It's only told us twice before. Because it's had to get a certain amount of data until it could have actually started, and it has predicted two of the bottoms before. So an indicator can never be 100% correct. So this may not be 100% accurate, but for me, it does signal the bottom vicinity. Maybe it doesn't signal the very bottom, and the past two times it has, it's just been sort of it's sort of luck. But for me, it does signal sort of that bottom vicinity, and that's sort of what I'm looking at for it. But we may never actually get below that $17,500 level again. Because looking at this chart here, this level is very, very strong support on the daily. So we may never actually break this support level again. So we do just have to take that in mind. I'm not saying that we are going to go down to $12,000. If we do break this level, there is a potential that we can go down to that $12,000 level. But we also have to take a look at this chart here. This is actually sort of more for me, is a bit more realistic. This chart, which is the Bitcoin price models, if I refresh it, what we're looking at is a CVDD. This has predicted the bottom of the past three bear markets. So the Pi cycle bottom has done the past two bear markets. This has done the past three. So this is sort of more trustworthy for me. And as of right now, it's sat at around 15,000, just under $15,600 at $15,580. So for me, This is sort of where I think the bottom is, but we can't ignore sort of these technical indicators that tell us that we are potentially going down to $12,000. Because for an example, we looked at this this pattern here, this bearish flag, that hit the price target perfectly. So it's sort of like, the probability, there's a higher probability that these patterns are going to hit their target. So that's why I'm sort of, talking about that $12,000 target. If we do break below this level, for me personally, I don't think we would go below sort of around $15,500. But yeah, 100% right. The price cycle bottom would, sort of be inaccurate if we did break below that $17,500 level. But yeah, we'll have to see sort of where the price can go in the next few days, as we sort of come down to the bottom of this support level, which I'm anticipating that we are going to do. Looking at the 200 MA, that's something that we're sort of looking at this week, and keeping our eyes on this, because we have, last week we did get a candle close on that 200 MA, and as of this week we are getting a pretty harsh rejection from it. There's still 5 days, 12 hours left of this weekly candle, but looking at this harsh rejection is sort of indicating to me that we are going to get rejected this week, unless we do have some nice price action towards the upside, which I don't really see happening. I don't really see that being very likely. I do think we are going to get a rejection this week, but we will see how that plays out. And if we do get a rejection here, for me, it's sort of confirmed that we are going to consolidate under this 200 MA before we get that massive move to the upside, when sort of that price cycle bottom indicator flips bullish again, where the green goes below the red. And that's sort of when I think, we're going to start to see some major moves for Bitcoin. But yeah, this 200 MA is what we're focusing on mainly this week, alongside this, daily chart here, because I do think this week we are going to have a lot more downside, confirming that rejection from the 200 MA.
Yep. No, I agree with you. There's definitely a higher chance of it. Now we're stuck underneath the 200 MA. We haven't gapped above it. We've almost confirmed a close below it, which is not great. Devon Smith has a question. Do you guys believe that leverage should be regulated on Bitcoin? Oh, good point.
That's quite a good question.
So. I think you should be able to access leverage. But okay, I have probably a different opinion to you, to AJ, to everybody. I would say, for example, in the UK, you're only allowed, and this is on, I'm pretty sure on FX. But basically, if you want to open up a trading account in the UK, not crypto, traditional markets, you're only allowed a leverage of 30x. Is it? I think it's AJ. It's 30 or 10.
I thought it was 10x.
It might be 10
I'm not
then.
100%
Okay,
sure.
I think it's 10. I don't think that you should be able to have access to 1,000x leverage. I think 100x most. But even still, the issue with leverage, guys, is that the people who are able to use it are much more experienced guys. The people who want it are the noobs who come in and they're like, oh, what leverage? Because the thing is, usually they're told by their mentor or something, someone who's not actually a mentor, but they call themselves a mentor. They say, oh, you can get 100 times your natural gains, use loads of leverage. It's BS, really. I think so. So should it be regulated? I think yes, maybe to 100x. I don't think you should be able to access more than that, but you don't even need it as much when crypto is as volatile as it is. I think you should access leverage, but not too much, personally.
Yeah, it is very dangerous. And when I first got into crypto about 2.5 years ago, I lost almost everything because of leverage. Just being a complete noob to it, and just being very stupid with it. So I do think it should be regulated. But yeah, it is something very, very useful. I use it on a daily basis today, and it's made me very successful. Been very successful with it after I've learned from my mistakes. So I do really like it, but I do think it should be regulated to a certain extent.
Yeah, it's like holding a sword. like a samurai can hold a sword, but don't give me a sword. You know, I'm stupid. I'll probably do something wrong. I'm gonna break something. You know. But yeah, drop it to a samurai. That's absolutely great. But no, it is. It's a dangerous tool. You know, it has the power to destroy your whole financial life. So it has to be done. You know, held with a pinch of salt. Anyway, AJ, do you want to bring us up to date on Ethereum?
Yes. So looking at Ethereum, you know, we've broken to the downside out of this rising channel that I did mention in yesterday's video. You can also call it a Bart Simpson pattern. You know, a lot of people like talking about those, sort of with his spiky hair at the top, and that's, you know, sort of exactly what we are seeing right now. Got a pretty big break to the downside. I don't know what the volume was looking like. If I just the volume was decreasing. You know, there wasn't much volume, but we did get that initial break towards the downside, and we are continuing this price action towards the downside for Ethereum. I had mentioned that $1,400 is a pretty strong support level. You know, previously we've used it as resistance, and you know, even before this we've used it as support and major support and major resistance. But again, if Bitcoin does continue to decrease in price, then Ethereum is most likely going to do the same, and we will break this level here. As of right now, we are sort of just getting held up by this $1,400 level, but I do think, you know, the likelihood of it is, if we take a look at the indicators, I think, you know, we can see the price come down to 1,200 again, you know, retesting this as support. You know, we've used it as major resistance before, so it is going to act as major major support. So that's sort of what I'm looking at. You know, the indicators, the stochastic RSI and the stochastic are in that oversold vicinity, but the RSI still has a little bit of room towards the downside. So that it could be, you know, what brings us down to this $1,240 level. And again, if Bitcoin does continue to have that price action towards the downside, then I most definitely think that we are going to come down and test this support level here. That's of all I've got for you on Ethereum.
Yeah, I was just going to add something in there from Gurav saying, do you think Fed rate hikes combined with the low earnings and negative GDP negate the Ethereum merge hype? Very, very good question there. So, I mean, yes. To break this down, the answer is no. I don't think it negates the Ethereum merge hype. I think it dampens if the whole crypto market continues to, you know, I guess like drop. But I actually think that the Ethereum merge, you know, a lot of the investment so far has been retail trying to, you know, anticipate. Hence why we saw this massive, you know, the Bart Simpson pattern to the left hand side on the way up. But I do think it will weigh heavy on it. But, you know, we're not having the merge until August, the 29th or 19th. Someone dropped that in there. Someone drop in exactly when the merge is. But I think by that stage, you know, the low earnings will be in the past. The rate hikes will be in the past. And so I think, you know, when the actual merge happens, if it happens successfully, and I went through this again in a video yesterday, so make sure you watch that. I said that there was a survey from some Australian company who basically said, you know, they expect to see a certain amount of pump in, you know, prior, but then also a certain amount of pump afterwards, because it's only if the Ethereum merge is successful, then big institutional investors will begin to get into it. So I do think that a lot of people are waiting for it to be successful. So even if there's not so much of a crazy pump before, because just now we have seen a crazy pump, that's because everyone's anticipating it. But then everyone's like, oh, actually, well, Ethereum's gone up by like 50%. I might as well just take 50% now, as opposed to wait for something that's going to happen in a month's time. So that's why we're seeing that sell off now. And that's pretty much that. Have they released the CPI for this July? No, they haven't.
That's in 2 days, isn't it?
What was that? No. That's the FOMC meeting. CPI data is. I think it was early in the month. I believe it was like a couple of weeks ago. I think it was 2 weeks ago. I believe, yeah. I want to say it was 2 weeks ago, and the answer was yes, and it was 9.2%. I have to check, but yes, I'm pretty sure they have. And then also, one thing that I quite like is, of course, the Pi cycle failed. We don't know if it's failed just yet. If we go below
Yeah.
17,500, then yes, the Pi cycle failed. But currently, we are, consistently seeing, that kind of move to the upside. So it doesn't look like it's failed just yet, only if we go below. But he is absolutely correct, Cypher. We're facing the most ridiculous socioeconomic crisis since the 70s, which he's absolutely not wrong.
Yeah.
We printed off,
And
what the Fed increased their balance sheet they doubled it to almost $9 trillion.
yeah.
Inflation's run crazy. A country's invading another one. There's threats of war, oil shortages, food shortages. The markets absolutely if we're in the absolute most mental time
Yeah.
that probably most of us have ever lived.
The funny thing is,
yeah.
the funny thing is, I've got a video for you guys that's going to come out today, and I did actually talk about that, the 1970s in that video as well. So that's quite funny that comment came up. So yeah, look forward to that one today.
So, and that's the thing, we're going to do as much research as possible and kind of tie in previous events. But, like you said, we are in a pretty crazy time. Fars, thanks for correcting me. CPI 9.1. You're absolutely correct. I think it was it was like 9 point. Anyway, 9.1. Fair play. Fed rate hike coming up soon. That's tomorrow. Tomorrow at 2 p.m. Eastern time if you're in the US. July's CPI. Okay, yeah. Okay. So, and just for you guys, your information, CPI is it's usually like month on month. So July's figures will come out in August. I thought you were talking about in July. Have we had it, or is it coming in the next couple of days? Usually, any report is always for the month before because they need time to get the data together. Oh man, there's loads of comments here. Nice. Yeah. So they were gonna start World War III and nuke some places. We ain't seen the bottom yet. I mean, look, if we do that, then Bitcoin's not gonna save us. Sorry, guys. we're effed royally.
Yeah.
I mean, AJ, do you have a plan if World War III starts?
No, probably just build a bunker and hide in it.
Yeah, well, exactly.
Try and save myself. Or I'll pull out my Modern Warfare 3 skills.
Go around doing some 360 no scopes on some people.
Yeah, that's it.
Okay, don't see why the merge is so bullish. It doesn't just decrease gas fees. The only bullish part is only deflationary, providing the gas fee is enough to burn the ETH. Yeah, you are correct. But it basically, you move into a deflationary system where money is constantly being burned every day. So that is bullish because you're going to end up, not at the initial stages, but you're going to end up with a supply demand. So providing that demand stays the same and supply keeps dropping down, the price is going to edge its way upwards. But also, one of the issues with different investment institutions is they have to abide by ESG, environmental social governance. And so those funds are seeing loads of money being poured into them because they're doing good. So this is why when Tesla, its share price dropped by so much because it wasn't included in the S&P 500 ESG. So, now moving from proof of work to proof of stake is like, oh, actually we can invest in this now, because it's not really, really bad for the environment.
Yeah.
That's the last little.
And that's sort of the issue, that Bitcoin and the whole crypto space has at the moment. We just need to make it more eco-friendly. And once that happens, I think, there's going to be a lot more people flooding into this space.
Yeah. I do have quite a serious question here, though. One for you, AJ. So obviously you've been in crypto for a couple of years now.
Yeah.
There's one doubt that I think everybody in the audience has.
Okay.
How good are you?
Rating my dance skills on a scale of 1 to 10. Oh God. I would have to put that as a 1. I'm terrible at dancing.
A 1. Do you know what? Guys, I think we should, if everybody who's watched this leaves a like, we will get AJ to dance. Let's go for, I don't know, let's go 100 likes. 100 likes and AJ does a dance move live on camera.
Yeah,
It's
we'll see
happening.
if we can get
AJ, do
that.
you agree?
Oh,
Do you
be the
agree, AJ?
worst
I
sight
need
of your life, I'll tell you that.
I need a confirmation. I need a confirmation.
I
Okay.
couldn't dance
Also,
to save
another
my
thing
life.
for Ethereum, people who are locked up on ETH. So if you're locked up on Lido, you're gonna wait. You're gonna have to wait at least like 6 months, and then you can access part, I believe, part of your Ethereum, so that people, even validators can't just dump all on the market at the same time. So it's going to be in like a little, segments. But yeah, buy the fear. If the world ends, money doesn't matter. Exactly. All that matters is your Call of Duty skills.
Yeah.
BTC USD all the way down to $20. Mate, I hope you're wrong,
Yeah.
Ghost Trader. I hope you are just a ghost, because if that happens, if you own any crypto, it's really bad news. But if you don't own any crypto, Bitcoin all the way down to $20 is probably good news.
Yeah. Best news you could ever hear.
Yeah. Okay, right, because people turn their heads from Ethereum because it is inflationary as well. This helps in the long term. Yeah, exactly. And I admit, AJ, can you just go through some of the comments, because I know there is a website that shows you exactly how much Ethereum is going to be like deflationary, and I can't remember the name of it. If you do know, drop it in the comments. I just can't. I wasn't planning on going through this, and obviously haven't got it in the top of my head.
Yeah.
But Ethereum deflationary, it shows you the burn rate of Ethereum after Ethereum deflationary. Type in burn rate.
Yeah, the market's been pricing in at worst a 7.5 rate hike. Yes, so I don't know. I know that Ben, you have that up on your tab as well.
Yeah, absolutely.
votes,
Let's have a look. Boom,
the
it's up here
votes as
now.
well.
So yeah, we can see this, and then also, guys, just as a little heads up. So by the end of the year, we're looking at.
Yeah.
So if this is a 75 basis point hike, is my screen up, AJ?
Yes, yeah, it is. I'll put it up.
Yep. So from here, then we're looking at 50 basis points. So 75 in July, 50 in September, and then into a, this is a 50 again, but this is more likely a 25. So 75, 50, 25, and then another cheeky little 25. So this is the most likely scenario: is 75 in July, 50 in September, 25 in November, 25 in December. That's the most likely path that we're on at the moment, which would bring us to a rate of 3.25 to 3.5, which is higher than what's typically aimed, but we need it to be higher in order to get us back to normal. So that's the current path on which people are kind of expecting.
Yeah, and Fars also said, and now earnings coming out weak, the market is losing confidence. Yeah, exactly. What we are seeing is both of those being priced in right now. That's what I personally think as well. And yeah, we could continue to see this sort of being priced in. And once we get that rate hike figure released and the earnings come out as well, that could impact the market a lot as well. I would, think that would impact the market a lot as well. The NASDAQ, it would sort of hit first, which would also, flow into the crypto market. And that's where I would see Bitcoin, come all the way down to this sort of level here, this support level. That's been major support. And that would also reset these indicators, get them into that oversold vicinity, where I think, we could see a nice bounce from there, looking at the technical side of things. But, again, fundamental things can come into it and just completely wipe out any technical analysis. So that's sort of why we want to look at both sides of things.
You're absolutely right. And Fars has pointed out here that the only way we will see a bounce here is by some miracle they decide to do a 50 BP hike instead of a 75 or 1%. And although that is correct, we would see an immediate bounce in the markets. I think that would bring us to a lower point in the long term, because it shows that yes, okay, it's a nice little session for us at the moment, but next time the Fed comes around, it's got to do more. So it's going to be like more pain for longer, which ultimately means probably people will be like, look, if I'm not going to get any return from the stock market anytime soon, there's no point getting in now. You might get a little relief rally, but we're going to be in more pain for longer. So as an institutional investor or someone with a ton of money, you might as well just, buy some gold or buy some, some safe dividend paying stocks or, something like this. So that's one thing to kind of consider, because people at the moment, they want to invest in something that is going to grow in the long term. And that can only happen if we have high, if we have a recovering economy. And that's only going to happen if we have a, basis point hike. I want to add in, Mr. Panda, remember how bullish most of YouTubers are at the top. And this is exactly it, guys. I even I saw this, I won't show you it, but somebody on Twitter had put up, and it was like TP1 was like 28,000, TP2 was 45, and TP3 was like 68. And I was like, how are you talking about that right now? You can say, I could say that, that those are my take profits, but why say that now? Because you're letting people think that, oh, this is actually a decent trade you should take. If you're willing to wait 2 years, that might be good. But I just think it annoys me when people are too bullish, especially when everyone's at the top. You think, and this is one thing AJ pointed out perfectly, on the way up, you think it's only going to keep going. And on the way down, you think it's only going to keep going down. So I think that's why a lot of people have been saying 12K, even though now we're at, 17 and a half, kind of seems to be the bottom for now anyway.
And just to add on to that, about sort of all these big YouTubers talking about that, but I remember back here, when we were sort of in those high, those low 60s area. And what I was looking at is, these indicators here. I was looking at the RSI mainly, and we saw that we were getting a very, very clear bearish divergence. That's what we saw. It was a bit delayed, very delayed, but initially that did play out. I was looking back here that all the indicators are in that very, very overbought and overextended vicinity. And same goes back here, when we were in the sort of mid 60s, getting into those high 60s as well. The indicators were all very, very oversold. And a lot of people were talking about sort of going to 100K when we were just below that 70K level. But then, I was again looking at this bearish divergence. We saw price action towards the upside, we saw higher highs, and then momentum towards the downside on the RSI. And for me, I just didn't believe any of these big YouTubers, that maybe they've been in the game longer than me, but, I just didn't believe them, because from the TA that I've been looking at, it wasn't indicating that to me. And I took quite a big short of this position here, just off the basis of this bearish divergence. And that played out very, very well for me. And for me, that was an indicator of the top. It's a double top. We had the bearish divergence, and we had all the indicators in the very, very overextended vicinity. So you do just have to be careful with sort of these bigger YouTubers, their price targets, because most of the time they are pretty extreme.
Yeah. And also just one other thing to kind of add in there is it's partly down to us as consumers. We don't want to hear, if we're invested in crypto, we don't want to hear, and therefore we won't hit the like button on someone saying, okay, Bitcoin's at 60,000 now, it's going to go down to 50. You don't want to hear that. You don't, if you're going long, you don't want to hear someone say, hey, your position is rubbish, and actually you're going to get cut out of your position, And I think that is part of the reason why there's such a perpetuation of someone saying, hey, we're going to go to 100,000, everyone buy Bitcoin right now. You're like, oh, this is amazing. Right? That's what I want to hear, because that's what, I want Bitcoin to go up because I'm in a long position. And I think that's part of the issue that we do see as well, across the whole market, not just in crypto, but also in traditional markets and stuff like that.
Definitely. And it's even when you see the price at all-time highs and the price at, the lows, you see sort of a lot of big YouTubers, their views on their videos doubles when the market is sort of at that sort of top, when it's at the all-time highs. And they want to keep pushing out that information about 100K, 200K, so they can sort of increase that. But you do just have to take into consideration and look at the other people that are talking about, the price going lower when we are at those all-time highs, because the majority of the time, those are the people that are correct. Maybe they're not as big, maybe they haven't been in the game as long, but they are the ones that are correct most of the time, because a lot of these big YouTubers are just trying to get more subscribers and more views, aren't they?
Yeah, no, you're absolutely right. And it is a shame. But I mean,
Yeah.
I will straight up tell you now that, like, I think, even later on today, we'll probably see there might be a bit of a relief rally, but, I think we're probably going to have a lot of anticipation and probably not very much volume in anticipation of the 75 basis point or the 1% hike that we're going to see. Like, around big news, expect volatility to go up. Like, it's not a bad thing to say, hey, guys, there's probably going to be a bit of a pullback. Because often there is,
and that can help save you as an investor as well.
Well, yeah, because then you can move your stop loss, which you should always use.
Use protection.
Girls and trading are very, very similar, guys. Very similar. The number one rule applies to everyone, and you all know it. I'm gonna get a T-shirt printed with it.
That's funny. Yeah,
it is.
They are very similar. Thinking about it now, they are very similar.
They are. Never let yourself get too emotional and get caught up. Always use protection.
Always problems.
Yeah, don't open up too many trades at the same time. Jokes. Anyway, guys, we've been on it for 45 minutes.
Charlie Thompson, both takes your money.
Both take.
That's a good one. I like that.
Yeah. Probably not worth it, and you end up cutting out of the position anyway. But we do it for the fun.
Yeah.
Good. Yeah. Yeah, so that's now going to be a thing here on this channel.
Yeah.
Love it. Okay. Anyway, look, guys, I think we'll wrap it up there. Obviously, tomorrow we're going to be online. I think we'll come back at normal time, but then also potentially go live again later. But yeah, then for the Fed rate hike and see what happens,
Yeah, are we going to go, Guru Avas, are we going to go live for that tomorrow?
I think it depends. Depends. What do you guys want? Drop a comment. If you do want us to go live at the time, then we will. If you don't, then I'll probably be in bed.
Yeah, is that the late one for you? 10 o'clock?
Yeah, I mean, it's 10 p.m.
10 p.m. Yes.
My mum says that I can stay up a little bit later nowadays. So. Yeah, no. So if you want us to go live, we absolutely will. Here we go then. All right, Devon.
Yeah,
you have decided.
We'll have to do it then. Yeah, sounds good.
Yeah, we'll come up with. I think what we'll do in the day, we'll come up with a couple different positions in terms of what we would do if this was to be the case. Obviously, we already have our plan at the moment. We're looking at a slightly larger timescale. We're looking at that kind of DCAing into the positions. But if it was that you wanted to trade this on a very short time period, trading just the outcome, it's very risky, very volatile. Wouldn't recommend it if unless you're very familiar yourself. But we'll probably go through and say, look, this is what I might do to try and prepare. But obviously, look, guys, through areas of news, high volatility, no one knows what the Fed are going to do. So, I'm not going to say do it. Yeah. So there you go.
Yeah. Just quickly before we go as well, Bitcoin looks to be breaking this sort of support level here. And if we do break that, then it's sort of going to confirm to me that we're potentially going to come down to this support level here. Indicators are very, very oversold as of right now, so maybe some consolidation or a retest of this level before we do see that.
Yeah, okay, go on. Can you go on to half hourly?
Half hourly,
you want to the 30-hour time frame? Sorry,
30 minutes.
30-minute, yeah. Okay, notice why this has a massive candle to the downside. The market in the US has been open for 15 minutes. No, sorry, 15 minutes? Yeah, was it 15?
Yeah.
Yeah, what time is it open?
Wait, is it open at 2:30? It's dumping now.
Here we go. See ya. What is the time in New York? Let's have a look. I don't know how. I'm pretty sure it's 9:15, and the stock exchange, I'm pretty sure, opens at 9:30.
Yeah, so another
NYSE
15
open.
minutes.
Yeah. So 15 minutes is probably in anticipation of what's going to happen today in the stock market.
Yeah.
And also, bear in mind, it could be because of earnings. I'm going to jump on Bloomberg and I'm going to have a look now and just see what is what's happening. But anyway, guys, we said it's probably going to go down.
Pre-market is
Look what's
down as
happening.
well, so I sort of think
What does that mean?
that's probably why it's happening.
Yeah, I mean, yeah, we're getting pretty good at this, aren't we?
Yeah.
Oh, here we go.
Disappeared there.
Hang about. Sorry, guys. I muted it. Completely not thinking about AJ. I was like, I've had enough of this guy. I don't need to listen to him. Hello.
Yeah, I think I froze out for a second there as well.
No, it's me. I muted you. I don't know why. I was like, okay, I've had enough of this guy. See you later. Oh wait, am I still live?
Yeah.
Right. Okay. Guys,
Keshu just quickly said, should we go short? I've mentioned this earlier. I'm not going to go short until I get that confirmation. If I can get my chart back. We'll look at this one here. Yeah. Because the indicators are very sort of indecisive right now, I'll be waiting for the retest and then the rejection before I even consider a short position. Personally, for me, I know a lot of people are going to be looking at this and sort of going short, but for me, the indicators are just too indecisive right now because we are in that sort of middle vicinity, and we have broken down. I would be expecting a retest, then a potential rejection before we come back down to this TP point down here. So that's what I'm waiting for. And obviously, I'll let you know if we do get that retest and then the rejection. So yeah, look out for that.
There you go. All right, guys. Thanks again. See you tomorrow. Yeah. Pleasure to be here. And see you all in the morning or the afternoon or the evening, depending on where you are in the world.
Thank you very much for watching. I'll see you tomorrow.
See you later, guys.